Hello and welcome to our brand new series of Talking to Heads. As you'll see today, we're in our brand new studio. Previously in series 1, we always went to the business establishment and interviewed the local entrepreneur there and on location. The format will still be exactly the same. We're going to be asking key questions about how they got to where they are today, some nitty gritty around kind of the business and how everything works. So we're hoping you're going to be enjoying this content, and we've got plenty of really decent guests lined up moving forward. In today's episode, we've got a local business leader and entrepreneur, the CEO and founder of DJS Limited, a chap called Dan Ware. They've recently taken over the old Bow Concept building in the centre of town, which is great. We've seen the operation and it's a really brilliant setup, and he's the perfect guest to get on for series 1 basically. I think to kind of kick things off, it'd be great to sort of have a little chat about where you developed the concept from, where you got the idea and how things developed basically.
That's great. Firstly, thank you so much for having me here today. It's really great to have the opportunity to speak with you, Ross. Okay, so the concept. So DJS UK Limited is a technology company. We're a financial services focused technology company. Our two primary products are Piggy Bank, which is a short-term lender that lends from £100 to £1,000 from 7 days to 5 months. And we also have a company called Lead Tree Global, which is a real-time lead management system for the financial services industry.
Mm-hmm. And what gave you the inspiration to actually get things set up?
So the inspiration for me was actually using a short-term lending product. So when I was, in my mid-20s, not a great deal of money, no savings, nothing like that. I had a situation over a Christmas period where I had the exhaust fall off my car. I was due to make a long journey down to Devon and I couldn't do it. So I thought, crikey, what am I going to do? My mum and dad were away for Christmas, so I didn't have the safety net there. So I thought, crikey, where am I going to go for this money? So I Googled short-term cash fast and a short-term lender came up. And I borrowed my £250. I sorted out my exhaust, and then 7-8 days later, I paid the loan back. And I thought, crikey, this is a really cool product. For people like me that don't have access to conventional credit, because of course, the global financial crisis had happened, and I wasn't being offered credit cards or overdrafts or anything like that. And I thought it's a real opportunity here for people that are just like me, for people that are working full time, for people that are conventionally credit worthy but just don't have access to conventional credit, and that's where Piggy Bank was born from. So Piggy Bank really came first for us.
Mm-hmm. And when you started off, whereabouts did everything kick off, and what was the size of your team? Was it just you that set up?
So I met some like-minded people at another finance company here in Bournemouth, and we just talked about what we wanted to do. We talked about this great product. We talked about creating a short-term lending product that was more fair, more responsible, that was just better than what was out there currently. So we managed to get a little bit of funding together, and actually we started above a garage. There were just 4 of us, 2 developers, myself, and a designer. We had 2 other directors, and we just went for it. So we spent 8 months building the product, lots of testing, lots of user focus, and we realised what we had was quite special at that point. And we released it, and things just went mad. We've learnt a lot over the past 6.5 years. There have been numerous peaks and troughs, but we've gone from 4 blokes in an industrial unit now to 67 people in a fabulous 12,000 square foot office in the centre of Bournemouth. So I'm really proud of what we've done.
So just on that note, obviously I've been to your offices, I've seen the setup, very impressive stuff. Obviously when we were talking about getting today's interview set up. And I was very interested in your company culture and how you've gone about getting that set up all in place, how things have worked and stuff. So tell us a bit more about.
Okay, well, so the culture is probably the most important thing to me. I wanted to create a business that I wanted to work for. So the things that I felt were important and things that I felt were valuable were integrity, were honesty, was transparency as well. So essentially what I've done throughout this kind of 6-year journey is employ like-minded people, people that get it, people that get me, people that will work hard, that will focus on the customer, that will deliver those positive outcomes at all times. And that's what's important. And the culture that we have in our business is fantastic. We have such a range of people. We've got people from 19 years of age to 60 years of age doing a variety of different tasks. 25% of our organisation weren't born in the UK. 20% of people don't have English as a first language. And DJS UK Limited really is a melting pot. It's lots of great people with lots of really good ideas, but that focus and that strategy is always on the customer. we're always focused on delivering the right outcomes for the customer in whatever product we're offering.
I'm pleased you've just started talking about customers, and a lot of your response there, you were talking about honesty and integrity and all these, obviously key words. I'm sure a lot of the people out in the audience today are very interested in this video because we're going to be talking about the payday loan industry as a whole. Obviously, it's got a bit of a stigma to it, if you like, if we're being completely honest. And I guess what I'm interested to hear is kind of what sort of things you've put in place to ensure that your company culture and the good things that come with it are relayed into your product.
Okay, so it's a focus on training, really. It's a focus on, as I say, delivering the right outcome to the customer. It's a focus on positive outcomes. So what we've done with Piggy Bank is we work on delivering the right product for the customer from nose to tail. So we will only lend to people that are in full-time employment. So we won't lend to people that are on benefits. We won't lend to people that are part-time, retired, or anything like that. We have around about 700 checks that we do throughout our application process. So they're credit-based checks. They're fundamentally affordability-based checks. So we will never, ever lend to somebody that we don't believe can pay us the money back because A, it doesn't make business sense, but most importantly, it's not the right thing to do. And I think that's why the short-term lending industry was tarnished. It's a throwback to 2011, 2012, 2013, where things were not done correctly, where it was like the Wild West. Things aren't like that anymore. We've got a fabulous regulator, the FCA, that ensure that everybody in our industry does things properly. So we have a very stringent underwriting process. We also, when a customer is due to make their repayment or a partial repayment, we call them 3 days before, we call them 2 days before, we call them the day before, and we call them on the day if we don't speak with them. We send them SMSs, we send them emails. It's total transparency throughout this journey in regards to ensuring they know how much they have to pay and how much, and the time duration that they're due to pay it in. The other thing that's really, really important is in every communication that we have that goes to the customer, whether before the loan is due, the day the loan is due, or after the loan is due, we try and prompt contact because we'll freeze interest and charges. If a customer is in a situation where something's happened and they can't afford to pay us back, the first thing we will do is put their account on hold. We'll freeze their interest and charges.
Can I just, as well, just on that note, sorry to cut across you, but with regards to freezing their loan, does that have a detrimental effect on credit ratings and things?
It does and it doesn't. It's better to have a loan that's in we call it a passive status. So if somebody's in an account on hold status, so they've got no interest and charges that are being applied to their account, it doesn't affect their credit rating as positively as adhering to their legally binding loan agreement. But it's better than the loan being in arrears. So with something that we think is really, really important is a saying that we have internally is it doesn't matter how they get there. So if a customer phones us up on the day they're due to pay and they say, Piggy Bank, I can't afford to pay you on this given day, regardless of whether they've been out the weekend before, whether another unforeseen circumstance has occurred, or even if they've lost their job or anything like that, it doesn't matter how they've got there. They're experiencing financial difficulty, so it's our duty. We have a duty of care over our consumers to ensure that we're not putting them into financial difficulty. So as I say, we will freeze their interest, we'll freeze their charges, and we'll work with them to set up a manageable repayment arrangement. Great question in regards to protecting the credit file. Something that's really important throughout the duration of time that somebody's on a payment arrangement with us, we will speak to them on a 3-monthly basis to see that their circumstances have changed. So if they're back in full-time employment, they're back affordable for a higher repayment rate, then we'll work with them to ensure that they can do that because we want to protect their credit file. Because at the end of the day, nobody wants an arrears flag or a default flag or even a payment arrangement flag on their credit file if they're looking for a mortgage or they're looking to get an asset loan. So we are really supportive of our customer. We're forbearant and we focus on delivering the right outcome to our customer at all times.
And talking to the customers, like one of the things that you sort of mentioned earlier in the question was about actually the type of people that borrow from you. So I always had it in my mind that, it would be people that were struggling, perhaps people that have got hundreds of defaults on their accounts, they're just in a bit of trouble and stuff like that. Everybody has their own individual circumstance, I think. Who are the type of people that are borrowing from you? Because obviously if they are somebody that are in they've got sort of good credit arrangements and things like that, why would they go to a payday loan company than just their normal bank?
Okay, so you've asked two questions there. To answer the first one, the core demographic, it's everyone, Ross. It's somebody from 21 years of age who's working full-time and living with their mum and dad to somebody that's 55 years of age and working full-time and supporting 3 children. As long as the customer is affordable and as long as they're in full-time employment and as long as their credit profile is good, then we'll lend to them. The reason why people like the piggy bank product is because of the flexibility of it. It's online. You can apply 24/7. In the vast majority of occasions, you don't have to speak to an advisor. You don't have to speak to an underwriter. So it's partially anonymous. And also, I guess the key USP for our product is you only pay for the days that you borrow. So you have an unforeseen circumstance on the 21st of the month. You know that you're going to get paid on the 31st of the month. You could sign a loan agreement for 5 months if you chose to do so, to give yourself a little bit of breathing space. But if you wanted to clear that loan on the 31st, you would only be charged for the 10 days interest that's been accrued. And that's very, very different to most unsecured loans.
Let me stop you there. You've just talked interest.
Yes.
This, for me, is quite a horrific story with regards to payday loans.
Of course.
What are you charging for interest rates?
Okay, firstly, we're not a payday lender. We're a short-term lending solution for an unforeseen circumstance. It does sound like semantics, but it's not. It's really, really important. It's fundamental to everything that we do because we want to distance ourselves from that 2012 payday culture. So rate is a really, really funny thing. So most people talk...
Hit us with it.
Okay, so most people talk about APR, which is an annual rate of interest. Our short-term lending product, on average, is a loan for a 2.5-month period. So APR is not a true representation of what we're charging. So essentially, we have to have that on our website from an FCA point of view. And I get it. I get why we've got it, because they need consistency over the board of the financial services industry. But it's not a true reflection. So where we are is 0.8% per day, 24% per month. So you borrow £100 and you pay back £124.
What is the total if it goes the full term? What does it work out?
It depends what the loan is. It depends the duration of the loan. So if somebody's had £100 for a 30-day period, as I say, it's £24 that they will pay back in interest. So if you have a 5-month loan and it's £500, essentially what you'll be doing is you'll be having a depreciation on your capital on a monthly basis. So your interest rate will decrease, but at the end of the day, it's 0.8% on the capital on a daily basis. So
what's the actual figure though?
The actual figure for APR is 12.55%. As I say, it's just not a true representation of the product.
Yeah, obviously when you hear that figure, that's something that personally sits a bit dodgy to me as far as that rate. But so you're saying that obviously that sort of rate is only applicable if they have to run the full term, they can finish it early?
No, not at all. No. That rate is only applicable if it was a year-long product. And a short-term loan is far from that. A short-term loan, by definition, is a loan for an unforeseen circumstance. It's not for long-term financial needs. Okay. So the longest we'll lend to, the longest duration we have is a 5-month period. Mm-hmm. So we won't let people borrow and then reloan again on the same day, because then you're using your short-term loan for a long-term circumstance. And that's not right. So as I say, it's 0.8% per day.
Mm-hmm. Okay. That makes more sense now. We're sort of talking about the short-term element of it with regards to kind of the...
And the other interesting thing is when you compare it to other products that are in the market. So you look at, let's take an unauthorised overdraft as an example. So the FCA have done a lot of work into unauthorised overdrafts at the moment, and they've decided that they're not going to categorise them as high-cost short-term credit, which is surprising. But the FCA, as our regulator, they know an awful lot more about this industry than we do, and then we back them on every decision that they make. But so an unauthorised overdraft charges 1.22% per day. We're 0.8% per day, so nearly half. Mm-hmm. And they have horrible fees for letters and all that sort of thing. So the benefit of our product and the benefit of every company that's operating in the online space in HCSTC at the moment is the maximum that they can charge is 0.8% per day until double cap. So if you borrow £100, you can never ever pay back more than £200. So if you look at, take a guarantor loan as an example, the chances are you will pay back, if you take a guarantor loan for 7.5 years, and you adhere to your legally binding loan agreement, you will pay back more than double what you've borrowed. If you take out a high-rate credit card, as an example, at 39% APR, so 39.9% sounds much better than 12.55% as an APR rate. But again, a credit card is a long-term financial product. So if you borrowed, as an example, £1,000 and you paid the minimum repayment on that, on a monthly basis, you would end up paying back about £2,300, so over double the amount. So when you actually contextualise the charges of our product and short-term lending, it's flexible, it's online, and actually, if you are utilising it for an unforeseen circumstance for a short-term period, it can be better in certain circumstances. Obviously, you know, I'm not a financial advisor, and every single person who looks at a short-term loan needs to look at the plethora of products that are available in the marketplace. What we really suggest is that people really shouldn't be using credit full stop. People should have a safety net. People should be putting a certain amount of their wages away on a monthly basis, and they should really be trying to work that you have a month's salary sat in a savings account, so that an unforeseen circumstance does occur, then you can utilise that. But unfortunately, you know, 1, 2, 3 back in the real world, it's not as easy as that.
Yeah, it doesn't work. And what about like the FOS and like complaints procedures and things like that? How's that all handled?
So the FOS, they are absolutely fantastic. We really, really like the FOS because, again, they're delivering the positive outcome for the customer. It's a independent body that looks at a complaint that a customer has made, and they make a decision on that, and we fully back that. The great thing from our side is, out of every 10 complaints we get, we manage to resolve 8 internally. So that's a really, really great place. So in terms of our industry, we're far below the curvature. I guess if I had one criticism of the FOS, is when a case is referred to the FOS, there's a standard £550 fee.
Right.
And that's a legacy fee because the FOS look after all financial services. So your mortgages, your asset loans, your 10-year, you know, conventional loan products. And they're really, really complicated. So it would take an ombudsman or an adjudicator quite a considerable amount of time to look at a case in order to come up with their fair and balanced judgment. With us, with a short-term lending product, it's very, very straightforward. So we feel that perhaps there needs to be a little bit of review in regards to perhaps a sliding scale based on the value of the complaint or based on the amount of time that's taken for each complaint. But as I say, we are great advocates of FOS. We think they're a fantastic organisation and we work very closely with them.
Yeah. That fee for me, I was quite shocked actually that you just said that 550 quid, particularly to somebody who's perhaps in financial struggles already. Like,
oh no. So that's that £550 fee is for the company. The company pay that. So you have to pay that. Exactly. So where that's not fair is if you take out a loan for 100 quid and you pay back £124, and then you're making a complaint because of one reason or another, and you're not happy with the responses that we give you, so you take it to the FOS. We're paying £550 regardless of whether we're in the right or whether we're in the wrong, just for them to make an adjudication decision. So considering, you know, we only are getting £24 worth of interest, it's not a true representation. Whereas if you've got a £500,000 mortgage, then all of a sudden, you know, that's a considerable amount of money. It's considerably more complicated as a financial services product. So an adjudicator needs to take more time. So
makes sense. Okay. I guess like the industry has been around for a little while. You touched on the fact that you were at a stage many years ago that your was it the exhaust fell off of your car and things like that, which gave you the inspiration to set up the business. How has this industry changed, I guess, in the time that you've been working in it and around it?
Well, the evolution of the industry has been seismic. It's been monumental. It is not the same industry that we entered in 2012. And it's down to the FCA. As I say, the FCA are absolutely fabulous. They realised that the short-term lending industry, HESTC, was not operating as it should, that it wasn't delivering positive outcomes. We were, as Piggy Bank, but the vast majority of other organisations weren't. And they decided to do a review, and they decided to put a price cap in place. They put the double cap in regards to if you borrow £100, you can only pay £200 back. A cap on fees, breathing space for customers, freezing interest and charges, and just a real culture of forbearance. And what's been really, really interesting is a lot of the big players fell by the wayside because it's very, very different. It's very difficult to change culture. If you've got a culture that's a negative culture, in inverted commas, it's very, very difficult to follow guidelines from a regulatory body. Our culture was built on integrity. Our culture was built on honesty. Our culture was built on forbearance. Our culture was built on delivering the right outcome to customers at all times. And that's really all the FCA is saying. So for us, it wasn't a seismic shift, but what it's done really is it's made people make the right lending decisions in our space, and it really protects the consumer. It's a much better industry to work in now. Honestly, it really was like the Wild West in 2011, 2012, and now it's heavily regulated. We report back to the regulator, the FCA, on a quarterly basis on how we're performing, on the consumers that we're working with. So the FCA at all times have full transparency of how all the lenders are operating. You know, we went through a year-long process to be authorised from the FCA to the OFT. Really, really stringent process. I'm very, very proud to say that we were the first HSTC lender that were given full authorisation, which was amazing considering the FCA said that they believed that only the 3 biggest players in the market, one of which has fallen by the wayside now, had the capacity to be able to get through this regulatory process. Again, we were doing things the right way from our inception, so it wasn't this seismic change, but the industry has changed seismically for the better, and we thank the FCA for that.
Do you think the government in itself has done enough to educate, I guess, the young audience with regards to sort of payday, I know it's not payday loans, but that kind of industry? Do you think they're doing enough?
I don't think the government do enough to educate anybody on the financial services industry. I feel that it's something that's really, really lacking. You know, as a 14, 15, 16, 17, 18-year-old, you don't get that financial education. And it's really, really important. You know, if the government feel that as part of the curriculum, it's important to learn about, you know, glacial degradation and the pi and all these weird and wonderful stuff, which is on the current curriculum, then surely how to manage your money, how to budget, how to, you know, understand how to pay key bills, what is a priority bill, all of those key points, you know, real life lessons. You would think that would be at the forefront of the curriculum, and it's really not. But the young is only a very, very small proportion of the wider population. Everybody needs financial education, and it's something that Martin Lewis has done particularly well. He really has put financial education and the managing of money really in the public eye, and there are numerous services that people can go to, you know, like your money saving experts, or if you think that you are experiencing financial difficulty, the likes of the charity Step Change, absolutely fabulous. But all companies have a responsibility. Every single company that works in the financial services industry has a responsibility to educate. But as I say, we're not financial advisors. We're not capable of doing that because we don't know enough about it. Yeah. But we need to be signposting the consumer to the right people so that they can get support, so they can get this financial education. And I think that at the moment, the government could do an awful, awful lot more. And I do think that that's why consumers do get themselves in a spiral of debt, because they haven't received the financial education, and because we live in a very, very immediate self-gratification culture. You know, if you want the new iPhone X, you can go there. You can go to Vodafone today and get yourself one. If you want a new 50-inch television, you know, you can go to the likes of Bright House and you can get one. And regardless of the fact that technology is going to be obsolete in 2 years, you want that instant gratification now. And what the government and what we need to be doing as consumers and, you know, as parents as well, it's not just the government's responsibility, it's our responsibility as parents. We've got a duty of care over our children to ensure that they understand that it's better to save, it's better to work for things, it's better to put money aside. And if you want a 50-inch television, you know, don't do it on credit. Just
save up and do it the right way.
It's going to be obsolete before you've paid the credit back. It just doesn't make sense.
Yeah, makes sense.
A little bit of a soapbox moment.
No, it's true. No. So I guess just the last couple of questions that I've got for you is obviously, what would you say is the biggest difference that Piggy Bank offers to, I guess, some of the bigger names that are kind of renowned nationally?
I guess again, it's down to integrity. It's down to one of our core brand values is focus on the customer, and all else will follow. And what we do is we have the correct processes in training, and we don't have a one-size-fits-all approach. We have consistency across all of our communication platforms, but every time a customer phones us up, they get a slightly different experience because every single customer is different. Every single customer's circumstance is different, and we believe that every single customer should be shown the level of respect to say, okay, where are you at? Why can't you afford to pay us back? I mean, I think it's prudent to tell you that out of every 10 loans that we facilitate, 9 out of 10 people pay us back on time or early. Mm-hmm. So it's only that 1 in 10. And the vast majority of those people, the reason why they haven't paid us back is because their circumstances have changed throughout the duration of the time of the loan. You know, they've either lost their job or their partner's lost their job or one reason or another. And it's our duty to ensure that we're supporting those customers and we're setting up arrangements that are fair, that are just, that can get them to pay our money back so that they can then move on with their journey. Something as well that we like about the piggy bank product is we like and we believe that people come into a relationship with us and leave in a better state. Because if somebody is 21 years of age and they've had no credit before and they take out 2 loans with piggy bank over a 3-year period, that shows that they are a responsible borrower. It shows that they have a modicum of understanding of credit. So it means that the banks and conventional credit are going to be more likely to support them. Yes, we're still going to be there if they need us. Yes, if they want the flexibility of the product, that's fine. And they want to do it 24/7 and, you know, not have to speak to a conventional underwriter. But if they do want to move into conventional credit, then they've left the relationship better. So.
Yeah, that makes sense. And what is next for Piggy Bank and DJS?
It's to keep doing what we're doing. It's to keep learning. It's to keep listening to our customers. It's to keep utilising qualitative and quantitative data to ensure that we're making the right lending decisions, to ensure that we're supporting our customers in the best way that we can. Crikey, what's next in our organisational development? Well, we've grown, as I say, from 4 people to 67 people in a 6-year period. We've gone from a 1,000 square foot office to a 12,000 square foot office. And we're looking at having 110 people by the end of 2018. But we're just going to keep what we're doing and just get better and better, just learn as much as we can, get the right people on board. You know, something that I'm particularly proud of, which goes back to this cultural piece that we were talking about before, is the vast majority of people that we have in management positions at DJS UK Limited started with us on the phones. They started with us as agents and they get it. They've worked hard. They've pushed themselves forward and they've grown with us. And the great thing about having people that have worked on the ground level and worked their way up is they have that understanding of the customer. They have that understanding of what is the right outcome, what is that positive outcome. So when we're sat there in management meetings, the customer is always at the forefront of every single conversation that we have. And seeing that personal growth, seeing somebody that, you know, is 21 years of age and starting with us, and then seeing 5 years later that they're head of operations, it makes you feel really, really proud. You know, having 67 people that are there and you know that they're using our business to pay their mortgages, to feed their families, it makes me really, really proud. And just as a kind of a sort of random anecdote, we've got a guy who works for us, fabulous guy. And he's a grime artist in his spare time. He's really, really pushing forward to kind of make a name for himself. His name's Marcus. He's a very, very talented guy. And him and one of his buddies who also works for us, who actually recommended him to work for DJS UK Limited, came to me last week, and they want to do a God, it makes me sound odd. They want to do a rap about or they want to spit some rhymes about DJS UK. About DJS UK Limited and about Piggy Bank, because they're proud of what we do. They're proud. And I said to them, you know, Mark, Alex, it kind of, I don't want you guys to think that everything has to come from a good place and everything has to come from integrity. And I don't want to go down, you know, the Iggy Pop route. I don't want to go down that sort of thing where people look at it and go, you know, there's no integrity there. What they're both saying is, you know, we're really, really proud of what we do. We're proud of working for Piggy Bank. And they coined this phrase, they coined not your average loan company. And that's it. We are not, you know, we're greater than the sum of our parts. We don't have these, you know, wonderful people with 25-year background in conventional banking. What we have are people that understand the marketplace, people that are young, people that are hungry, people that understand the consumer, and people that have been in situations where they've utilised the short-term lending product in their past. As I say, like me, and I get it. I get where these people are at, and I get the kind of fairness, and that's why we have this focus on forbearance and delivering the right outcomes at all times.
Love it, and I can definitely see a good ad coming from you. Thank you very much, Dan. Pleasure to have you on.